to Talk About TV, where we talk about all things experiential hospitality. I'm your host, Michelle Oliver, and today's conversation is part of a series with the members of the Experiential Experts Alliance. This alliance is made up of individuals who have spent many, many decades working in hospitality from every angle, everything from purchasing RV resorts, from boutique hotels, marinas, people who work in lending, management companies, the list goes on and on. I know that you are going to gain a lot of insight and information from these remarkable individuals, and I welcome you to this entire series of the Experiential Experts Alliance. Kyle, it is wonderful to be here with you today. I'm here today with Kyle Losch of the Madison Group. And Kyle, could you take just a moment and share a little bit about who you are and what you do?
Yeah, absolutely. I'm thrilled to be here. So my name's Kyle Losch. I'm the director of finance at the Madison Group. We are a 22-year-old commercial mortgage brokerage company. We arrange financing on assets nationwide, and we really specialize in outdoor hospitality, mobile home parks, multifamily, self-storage, and industrial assets. We've arranged financing on a lot of different assets across the nation, from Alaska to California, to Maine to Florida. So we are comprised of a team of ex-commercial bankers that have worked at BB&T, Wells, First National Bank, and so we really try to do a good job of learning our clients' investment strategy first, and then arranging financing that helps them meet those goals that they have.
So that's a pretty unique approach to this, would you say? How are you? Can you describe a little bit more about how you are different? I know the first time I met you and we spoke and you shared your story about how you wound up here, it really made an impression on me. So I would love to hear a little bit about that as well, if you would.
Yeah, thank you for that. I have I'm an ex-commercial banker and worked in middle market banking, arranging financing for on commercial real estate. And I really got into the brokering side because working directly for a bank, you only have one credit group, right? Or one loan committee. And if they don't like the asset or they're not lending in that space, then you were unable to help that client. On the brokering side, we have 1,000 different lenders in our database, a little over, and
Wow.
I look at that as having 1,000 different loan committees or credit officers to work with, and that has really allowed us to deepen our relationships with our clients, and basically arrange any type of financing with that client, whether that's bridge financing, hard money sometimes in tight positions, or tight 1031 closing timeframes, long-term financing, agency financing with Fannie, Freddie, or the CMBS lenders, conventional financing with banks or credit unions. So we're really able to learn that investment strategy of the client and then tailor that financing to meet their goals. Whereas, working directly for a lender, we were unable to do that. And so I think that's really why the team came together. And what really differentiates us, I think, is we are ex-commercial bankers and we understand the loan process and getting it through credit committee. And that has helped us get loans done that maybe otherwise wouldn't have gotten done.
You really have the best of several worlds, right? You have this background, you have a tremendously large network of people and resources. But what I love most about this is the intimate relationship that you have with your clients. So you really take the time to understand who they are and find a way to get them through. I know that you've accomplished a lot of creative things that other people just can't do for a number of reasons. Either they don't take the time, or they don't have the resources, or they don't have a deep understanding. So quite remarkable. What do you like about the outdoor experiential hospitality space? Like, why is this a thing for you?
That's a great question. I would say a couple different. I would say a couple different reasons. One, I grew up on a farm, so we traveled a lot. We went to Canada every single year in our motorhome. My grandparents had one, so I've always been an outdoors person. We've always went to RV parks, so that was kind of one of the reasons why we really like this asset class. I'll take it back to the formation of the company. We started in with just multifamily and industrial deals, and we really found a niche in the mobile home park space. And 15 years ago, the mobile home park space was not as a desired asset or an investment as what it is today. Um, so we really found a niche there because it was hard for clients to get or obtain financing on mobile home parks because lenders really weren't familiar how to underwrite them, how to finance them, if they would perform or how they would perform. And
Mhm.
so we really worked hard to get our lender database up with lenders that were comfortable in the MHP space. And as we were doing that, we financed a lot of mobile home parks that had RV park components. So they had 60 mobile home on them, and then also like a 20 pad RV space. And so we kind of diverted a little bit into the RV parks, just doing full transient RV parks, and we found that that was another asset class that was harder to find or arrange financing, just because of the nature of the business and it being very transient income. And so we learned everything that we could about the RV park space. And so as we have grown, we have really done numerous campgrounds, RV parks, um, glamping. I mean, you name it, we've arranged financing on it as long as it's real estate.
Wow, so you started with the most difficult thing in the entire space and figured it out, and now you're an expert, and now you've expanded, it sounds like. And what's amazing is it came from something that you loved, right? It's so nice when we can tie the things that we love to the work that we do, and you're so good with people and so caring about what they're really trying to accomplish. People come into this with a dream, they want to make it happen, and the financing can be the most difficult part. So that's really, really wonderful. So tell me, what is the best way for someone to work with you? What would they do next? How would they reach out to you?
Yeah, you can reach out to us on our website. We have a web form fill and tell us a little bit about the project that you're working on or the type of financing that you're looking for. You can reach out directly to me on my cell phone or via email. And really, what we try to do is then just set up a time that we can get on the phone um, and understand what they're trying to do, right? Their investment strategy. And I always kind of go back to that because that really drives where we go on the financing side. So if it's a first time um, borrower for an RV park or something, that may dictate where we go versus someone that may have 10 in their portfolio, or are trying to do an uplift on the asset, like a value add or an expansion. Some of them are ground up construction. All those little intricacies are going to determine which lender we can work with to arrange that type of financing. And then after that discussion, we start to collect some documents. We provide feedback to the client. We work together to get a loan overview, a loan package done correctly, and that's probably the most important part. Most deals fail because of the presentation to the lender, and that's where a lot of people get frustrated because bankers talk in different languages. It's like it's just totally different, and
Yeah.
they use a lot of different acronyms and they do calculations differently. And it's very important for us to learn the lenders that we use, how they calculate debt service coverage ratios, how they calculate certain loan to value ratios. And so we work very hard with our clients to create that package to present the best loan package to those lenders and in return, that's how we get the best financing.
Let's talk a little bit about the Experiential Experts Alliance, because you have been selected to be a part of this. And truly, in our conversation today, it's very obvious why. Because you are an expert in this experiential hospitality space, which is absolutely exploding right now. What does that mean to you, the experiential? What does it mean to be an experiential expert? What does that mean to you?
That's another good question.
We're just all exploring it, right?
Yeah,
So
yeah, I think that we are exploring it, and we're trying to figure out what needs in the industry that we can meet, and I think that will really drive our purpose. Um, it is comforting and humbling to me to know that 15 years ago or whatever in this space, it wasn't as big as what it is today, and to really have that kind of expertise and knowledge from that standpoint of when it wasn't such a hot asset class, right?
yes.
Experiential hospitality wasn't a thing that a lot of people were talking about, or RV parks wasn't the best investment at that time.
Mhm.
And you kind of go back to the 80s where condos in Florida were really hot new investment, right? And everyone
Yeah.
was doing it, but no one really knew a whole lot about it, and people were learning. And so I think the Experts Alliance group, right, has been in the industry for a very long time when the asset classes were not as popular as what they are today. So we have learned and know a lot of the things that what to do and what not to do. And I think there's a lot of value there and expertise to help people that maybe are newer in the industry or just want to learn, like, hey, would you do this, or would you not do that? What's the difference between X and Z? And what's the risk, right?
Mhm. It's a very appealing industry, right? And as the world has changed in the last 2 or 3 years, it's becoming, I mean, it's just trending. It's all over the place. So what I've noticed is a lot of people think, gosh, I've had this RV resort, or I want to jump in, I just want to jump on the bandwagon. How do I turn this into an experiential property? But there are risks involved. There are things you don't know. And I think this is the biggest value that as the entire alliance, we can bring to people, because no one, I mean, I won't say no one, but I would guess that very, very, very few people have your history and experience in this space. And to be able to bring that to bear on everything that is happening now, you're just going to see things that other people can't see. You've just been there for a long time. So are there any, do you have any examples of potential risks or things that you would like to share with people that they really need to think about? I know they need to get on a conversation with you, on a call for a conversation, ideally, but does anything come to mind that you would like to share about this overall experiential hospitality industry?
Yeah, I mean, I think I could spend all day just talking about risk and how to mitigate them, because that's really what we do on the financing side. We really try to identify all those risks and then how they are mitigated. And I can go through, several examples, but just underwriting your pro forma, right? So how the park has operated in the past doesn't necessarily dictate how it's going to operate in the future. But lenders, historically and still now, have always looked at past performance to dictate future performance. And it is difficult to talk to them a little bit sometimes about that. And because they do not lend typically on pro forma basis. So when you're doing your analysis for your pro forma, we really try to collect all the data that we can to support that. So if you're buying an RV park or a campground that's got, that's charging $150, for a weekend or something, and your plan is to increase those rents to 200, then how do we justify that, right? What do the comparables in the area say? Are there any comparables, right? How can we really build that case for the lender to prove that pro forma that you have created? The other thing is expenses, right? Past expenses should dictate a little bit how future expenses are going to be, but there are so many different things in this industry that has changed, and insurance is one of them, right? Insurance in the South, we've seen skyrocket 30%, right? And so if you're buying an RV park or a campground or boutique hotel, and the past insurance expense was 10,000, it's really important to go out and get quotes to see what it's going to be when you take ownership, because it could be 15 or it could be 20, depending on the policy amount. So that could really sway your net operating income. So those are a couple different things to really look at. Management companies. Are you going to have a management company manage the park for you, right? Or the hotel, or whatever the asset class may be? Really doing your due diligence on that management company and knowing that they can perform. We've seen management companies that have unfortunately taken assets and not performed very well. And so we have to backtrack and maybe do some creative things. And we've seen other ones that really excelled and had the asset performing really, really good for the clients. But going through all those exercises is very important.
Oh my goodness, Kyle, I really appreciate that this is the topic that you brought up. Recently with my company, Experiential, we have implemented it really is a coaching session that is now a requirement before we will even work with anyone. And it is exactly because of the concept that you are describing, because there is a mindset element to this, that you cannot make decisions based solely on the past. It does require a whole new understanding of how to think about everything. You no longer have an RV resort if you're converting an RV resort to an experiential property. It's a uniquely different concept. And that requires different staffing, like you said, different management. You can't just look at the pro forma from the past and explode it into the future. It does not work that way. The way people are trained, and it all begins with the owner and management of the property. And that sometimes is the place that actually is the most rigid. Although they don't perceive it that way, they think it's all the external things need to change, when in fact there is a mindset that has to shift. And it is always about change, right? Change your mind, then change your behavior, change your perception, your perspective. So that's what makes it so exciting and creative. But that's also why you need people like Kyle, who have been there and have, basically, you just have the bigger vision. You're further along down the trail and you can guide people. So really, really appreciate that input. I think it's significantly important. Is there anything else you'd like to share today?
I would just say, a lot of people, like I said before, just talking with you, that a lot of the loan requests kind of fail at the lender's desk because of the presentation. Mm-hmm. And so it's very time consuming, right? And investors are very busy. They don't necessarily have all the time in the world to make this nice package and, cross your T's and dot your I's before getting it to the lender. That's kind of where we come in, to really save that time, and do that due diligence to get it to the correct lender's desk, right? To the one that can execute as well. And you're going to see in this market, treasuries have dropped, 35, 40 basis points in the last 2 days, and two banks have been closed
Wow.
and will be sold. And so this is going to be a very interesting market, certainly different from 2008, but we are going through very similar things in the financial world. And the most important thing is working with people that you can trust, right? That can save you some time, get it to the right lenders, but also lenders that are going to execute on those terms. And what we've seen in the industry just in the last, I would say, 6 months, is that's where we've really come into play and been able to shine, because of a lot of people have been what we call retraded in the industry, where terms were presented, in 2 weeks before closing or something, it completely
Yeah.
changes, or they just can't do the deal anymore. It's not necessarily the lender's fault in most cases. It's just the market. And so that's where it comes really, really important to work with people that you trust and that they can deliver or do the right thing the whole way till closing.
It is significantly important that people work with other professionals that they can trust and who know how to communicate. Everything that you just said is what the Experiential Experts Alliance is about. Honestly, people just, again, I'm repeating myself, but you don't know what you don't know. And it can be very risky, very expensive. And in a market like this, how many of us can afford to just experiment with these investments and the management of said investments? So we have come together really with the best of intentions to serve. And that's why we are providing these no cost, I don't know what you want to call them, evaluations, opportunities for people that have projects they're working on or thinking about working on. We are mitigating the risk, and the risk can be tremendous. So I appreciate you sharing that. And this is such valuable information. I'm so excited that we have you on board with this alliance, and you are just, plus you're just such a kind, caring human being, Kyle. And I love having you here. So thank you so much for your time today, and we'll have you back again. And anyone who wants to reach out to Kyle, just fill out the form or pick up the phone and give him a call. Thank you.
Thank you so much.